Good afternoon, good evening, everyone. Today is Friday. It's the last day of the month, last trading day of the month, August 30th, 2024. Our goal here is to review the market's generated information in a holistic fashion. We are intimately following the auction's narrative of both ES and NQ. If we have time, we'll theorize and add additional commentary towards the end. We did speculate the market today. Please see our uploaded video if you'd like. It contains my real-time analysis. We use these archives as a tool for our professional development. Okay, so let's look at how we did today to end this month. So again, this is the same month as the beginning of August, where we had this crazy start with high volume. This video is not going to be about the monthly review. We're only going to focus on today, which is just Friday. So just to get into our typical process, where is the market coming from and what was the goal? So the market's goal for today and where are we coming from? This is let's actually look at the monthly candle. We're actually starting somewhere, I think somewhere in here. We were still in like a green body for the most part. We just had a little more of a wick. So really the S&P 500 was just trying to have like a bullish close because this was a very crazy month of July for sure. It was a big heavy set red candle that closed green at the last moment. So, looking at the weekly candle. So again, we were sitting somewhere around here, like around the 600s, the 5600s, the 56 10s, 20s or so. You can look at our prep this morning and see where we're at. But basically the goal was to just end the month strong. You know what I mean? We don't want to run to the finish line, run through the finish line, not end on lower balance, actually close through, because we tried on Thursday. The buyers tried and they failed. We're seeing more balance from the highs to the lows, from the lows to the highs. But when we tried to stay at the high, we got rejected on Thursday. So really the buyers wanted to protect this low from Thursday and ideally make a new high. We'll see how they did today. I believe they did tick through just a little bit for the ES. Same situation, same story for the NQ, except they were a little more red. They had a little bit of a wick to their body for sure. So it was nice for them to be able to close this weekly candle back into the range of the prior week. So really the same situation coming from the bear flag for the Nasdaq, but they were much in a lower balance opposed to the S&P 500. So their goal was to stay the hell away from this low of Thursday. We're able to have a nice little gap up and still an inside bar, but they closed properly. So not a higher high, not a higher low, strictly inside bar, straight compression. So they build volume higher. They didn't go anywhere near their low. So I think that was a job well done for the NASDAQ. We'll look at these specifics shortly for a better idea of how they did. Actually, let's go ahead and take a look at the footprint. We'll start with the NQ first. Since they had a little more of a compression, let's see what this actually looked like. So 262 range in total. You can see where the buyers, you can see where the sellers are. The majority of volume was done towards the bottom third, bottom half. So say what you like is with this. I don't recall the delta for the NASDAQ, but I do remember the ES delta was extremely negative. But notice we ended slightly positive with decent volume. We'll call it decent volume. So just straight compression day. Not really much was done for the S&P, for the Nasdaq. The outlier today was definitely the S&P 500. So you can only see what you see now. We'll look at the intraday shortly. We're not gonna see the overnight. I actually may turn on the full session. I digress. This was like negative 10,000 delta, if I recall. I think we got up to, actually, one moment. Let me pause this. All right, sorry about that. I had to pause this. So I ended up adding the two more sections for the footprint data. So before we go to the S&P 500 or return, look at the delta for the Nasdaq. So we finished at 800 positive. The max we got up to was 3,200. The max we got to the minimum we got to was negative 900. Right? Okay. So check this out for the S&P 500. We finished at 1,000. Right? The max was 7,500. Right? Look at the fucking the minimum. It was the same minimum as yesterday. So there was mad sellers. There were mad sellers in here. And the way that these fools pushed off this ground was amazing to see. Was amazing to see. So again, we don't have all this on video because this was like later in the session. But again, this was month end. You saw a lot of like rebalancing and everything. But I think this was just really cool to see. But that's the min and the max delta. But just seeing the way that we finished, there's actually a column for a finish. I think it calculates. I don't know exactly how it calculates, but it'll basically show you the math between that. But basically, this shows that this was much effort from the buyers to really get off this ground and thrust it upwards to the point to where they left some singles. But we'll look at the footprint shortly. So before we'll look at the market profile shortly. Sorry, I'm getting excited. All right, so we'll go ahead and get back to the catalyst because I'm over here cheesing, gushing. So this is our quote that we looked at earlier. Good questions, outrank easy answers. Paul Samuelson. This is the earnings for next week. So it really wasn't much going on for today on Friday. There's not much going on for next week either, except Broadcom from what I saw. Let's see. So we have it's actually showing as last week because they already have it updated. But we did have the PCE today, the barometer, the PMI, which subscribers get I think like 2 minutes early, maybe 3 minutes early. And then you have the consumer sentiment, which came out at 7 as well. We were looking at the SOCs today. I'll make a comment on those shortly. So we understand the footprint. Let's see how we finished here for the sectors. My apologies. So we finished up 1%. Leaders were tech and consumer discretionary, which is nice. Let's see how NVIDIA did just because we're curious. Up 1.5%. Nice. So again, this wasn't about tech. This was about the breadth, baby. Utilities, real estate, materials, industrials, healthcare, financials, even energy got some today. Damn consumer staples. We even got our defensive sectors get some love. So a nice show for the breadth. Looking at the 5-day, looking at the month. The only one negative is energy, and they may be one of the lightest, if not the lightest. So for tech to be up only 1% and everyone else thumping like this, definitely a defensive posture. They don't need tech, at least so far from what we've seen. Even when you look at a 3 month, if you look at the 6 month, we're talking a little different, but even still, everyone is doing fine without tech. You know what I mean? So that's a conversation for another day. I'm not the right person for that. So let's look at the market profile. Let's start with NQ since NQ's just been getting the love today. Again, they didn't really have too much. They were primarily for like compression today. So we have our weekly candles so far, and then we have the past 2 weeks. The thought was originally going to build more volume here, and it's basically what we did because there wasn't much action traded here beforehand, not much at all. So this that same purple zone, we still did not get to these singles here near these 700s. So really lackluster day, not too much to talk about, no singles or anything to speak of. A little bit of a wick at the bottom, but we'll go ahead and put those bad boys together. And if you notice, if we put these together, keep your eyes here as we merge. I mean, really not much has changed. Not much has changed. So we're in the same situation as before. At most, we can maybe throw a zone up in here. And we'll just call this August low volume node. That way we just see that when we come down here, we may have a potential to build some volume. Okay, So for more exciting news, let's look at the S&P 500. They did indeed create some singles. We'll go ahead and put these singles in here. Okay. Today was the 30th. Singles. Nice. Have a little bit of a wick at the bottom. Okay. So again, the S&P 500 primarily been building volume higher. So it's just kind of hard to even just really look at them. I'm sure you can notice a difference with them and technology. So we have the composite volume point control is here at the 50, 60s. Boom. Same thing for the past 2 weeks. Boom. That's the same down the VPOC for today. However, this is take this with a grain of salt because this was month end. So this was just a lot of rebalancing towards the end of the day. So volume point of control is really, it's really down here. We just kind of squeezed through given the absolute massive sell-in delta and then the buy-in delta, just a big explosion here. And then they sneakily accepted these prices, which was cool to see, which was really cool to see. I didn't record it, but I participated a little bit. I got my butt whooped. But other than that, yeah, really not too much else to say. Just high balance. But notice this big old range that we were stuck in for the longest between the 20s and the 60s and the 20s and the 60s and the 5600s and the high 60s. All this bouncing around. And we slipped through. Now we're not over it yet, but they're finally over this high balance zone. So there's a possibility that they may squeak through if tech can get their stuff together. So it may be a little more of a grindy action, if you will. But notice we're past the worst now. Same situation where we're breaking down and we're failing to get back over support, and now we have this big fight to have to get back above these ledges. We're finally over these. Well, if we can get over these ledges and actually hold and use this as support, same thing applies. So now the wind will be at their back. If we fall back up under the 60s or stay under the 70s, we're going to be subject to be back into this range and just kind of stuck here between the 660s and the 560s. But okay, I won't beat that down too much. How are we doing? We on 13 minutes? Cool. All right, let's look. Take a quick glance at the 138-minute candle. You can just pause. Same situation here, just in the candle form. Still lower highs, lower lows for the NQ. That is not the case for the quote-unquote market for the S&P 500. We are bracketing to the side with a little bit of a looking above, some looking below. But as of right now, bullish on the higher time frame, bullish on the intermediate, bullish on the daily so far, with the more of a balance. Well, we're balanced on the daily with a bullish tilt. Looking at the actual 65-minute, let's look at the NQ first because they're not going to be as cool to see. Wait, if we do full session, what if we do just like an hour? Sure. Start of the session is here. Again, this is like super light volume. I typically don't look at the full session. Just look at the bottom column, all light volume all the way until the market opens or the US session starts essentially. But just for us to see, we'll do that for the S&P 500. But shoot down, you can see where all the sellers are. Buyers are trying to hold value here. We can't really get off the ground. Sellers are still pushing. You can see the delta. They're not letting it go. They were finally able to break through. You can notice the higher, the positive delta there. And especially with the stuck sales down here, kind of like a beach ball analogy. They kept spinning and spinning and spinning, and then they ended up popping back up. Once we were popped up, noticed the sellers tried to initiate a little bit more, but they couldn't push it down. They kept trying, and then we ended up having an explosion higher. Again, this is what we were just looking at. or it's what we just discussed earlier. This is the month end close. Can't really see it too much on the NQ, but you can see it, I'm assuming, more on the S&P 500. Throw this bad boy on an hour, and this is the full session. So market opens. Again, we have some negative delta here building up. They're kind of just being drug above, but they're, the sellers are just really swarming, just really trying. And then they finally ended up, pushing it down and keeping it down. You can notice the high sell delta here, and then they're just pushing and pushing and pushing. Same situation with the NQ. Volume's increasing. Look at the volume: 145, 188, 200, and then 155. Sellers ended up giving up here. You can see them kind of being stuck there. Same situation. We'll pull this back up on the full session and then the 65-minute. This is just the RTH. Same situation. You see them being stuck here and here, trying to push it down. They couldn't get any more progress. And then they just popped up. And then a solid close. So again, that's a footprint. We won't belabor that too much. Just want to look at it in that perspective. We'll check out the 3-minute candles. Again, we had our PCE, the PMIs, and we had the consumer sentiment. More focus was on the PCE and a little bit of the barometer here, which I believe was this candle, right? No. It was this candle and this candle. So again, I mean, we did chart this in real time. You can see the SOCs on here. We ended up popping above and still trading within it. And then we ended up having our consumer sentiment up here. We're just well above the range, but we ended up finding our way back down and kind of just bouncing around. So it really wasn't too much to focus there. We were primarily focused on this initial balance, because this ended up being just a big chop range. A lot of energy was just stuck here. Once we broke below rather, pretty much just stayed under the whole entire time. So I mean, this is a very much of a balanced day, but I am getting a little bit of ahead of myself. I kind of skipped over the overnight, so just bear with me. So same situation, just for some context, where we're coming from. My apologies for the little scatteredness. We have our Monday overnight, Tuesday overnight, Wednesday overnight, Thursday overnight, which is what we're looking at. So we have low to high, balance, high to low, drift up for balance, continue up, high to low, same situation where we drift up, call that shit balance, test the low side, we get rejected, test the high side. So I mean, you can oversimplify it like that if you like. Looking at the actual RTH session, like we mentioned, we were opening directly within the range of the prior day, literally in the middle of the initial balance. So this was balanced. We weren't really too excited about trading in here, so we just stayed patient. So again, we're just kind of pogoing around here. Once we broke below, we stayed below, trending below this 5 smoothing average until we had a nice little trend up. The leg up continued as we channeled lower, tried to test within this impulse area, found support. We were just off to the races. Ended up recovering this IB low, closed near the IB high. Solid day, pure example of balance. Looking at the S&P 500, we won't go over the prior days, but just looking at the RTH session, same situation. Low to high, high to low, high to low, excuse me, high to low. And then today, balance, low to high. Looking at the full session, same situation here. We had drift open above the prior IB mid, so they were a little more bullish. Not bullish, so they had a little more strength to them. Same situation. We go higher, we go lower. Excuse me. We go higher, we go lower, we go back higher, we go back lower, we go back higher, we crash down lower. At the same time with the NQ, once we were below here, we're pretty much just stuck at this IB low. Found some legs below these 5 smoothing average, can't stay above. Tried the second attempt, ended up trending above. Found support, and then a nasty leg up to finish the day. Well above the IB mid and close to yesterday's high, but close. Oh, my apologies. They did break through. They broke through by a couple of points. So solid day overall, very much so for the S&P 500, not so much for the Nasdaq. So thankfully we were able to get through everything. Hopefully all that made sense. We understand this is just more of balance, and like we said, it was very important to be careful because you can chop yourself up by losing the forest for the trees, if you will. I did have a note to say that though today is quite similar to the other balance days, I believe that the S&P 500 is attempting to break out at this point. But of course, they are innocent until proven guilty. This is that balance range for the 138-minute candles. No real strong body closes above. We did have here, but with context, yeah, we'll need to look. We'll need to look at yesterday one more time. Let's take a quick peek at this. We'll do just the full session. I mean, we'll look do just the RTH. Yeah, this was just a straight fail. So I mean, we just tried grinding up. There is no real higher time frame player really pushing this up. That's not the case today. We're coming in hot. So I just feel like, just a little different. So depending on how we open up for next week, just be on the lookout. We may be trying to get towards the end of this balance, especially with the upcoming data next week. Very important to be aware and on your toes. And then just another shout out for the delta for today, seeing how we went from negative to positive for the S&P 500 is a very nice push from down under. So yeah, a very solid end of the month. We'll take another look and say respects to our monthly candles. And I look forward to June. We should have some monetary policy shifts and a lot of data. Yeah, it should be interesting. All right, have a good weekend.